One of the biggest criticisms of cryptocurrencies is that they're highly volatile. Fiat maximalists trumpet their horns when pointing out the wild price movements of crypto. However, stablecoins destroy this narrative, as their whole modus operandi is stability. My name is Guy, and in this video, I'm going to be taking a look at the best stablecoins to currently stash your sats. Now, as is always the case, I need to stress that what follows is not financial advice. I encourage you to speak to your advisor before investing in crypto, stablecoins or otherwise. And if you're new to the Bureau, then I suggest you tap up that subscribe button and ping that little bell. That way you can get these videos served fresh the moment they leave our crypto kitchen. All done? Great. Let's crack on. Now, for those of you who do not know, stablecoins are cryptocurrencies that are linked or pegged to a real-world asset. Most often, this is a fiat currency, like the US dollar, the British pound, or the Japanese yen. But they can also be tied to other assets like gold or oil. Stablecoins offer steady valuation and stability in a market that is prone to extreme changes from one day to the next. There are a few other purposes stablecoins serve, however. For example, since a stablecoin offers a predictable and steady value, it can be used for transactions just like a fiat currency. Many within the crypto industry view this as a significant step towards adoption. Additionally, since these coins have a stable value, it makes sense that they would be ideal for use for recurring payments. Utilities, rent, and salaries are all ways stablecoins can be used. This is in contrast to the volatility of other cryptocurrencies, which makes it difficult to make regular payments since the value can change drastically from one month to the next. Heck, even from 1 minute to the next. Stablecoins also offer investors a secure way to get into the cryptocurrency market without exposure to the volatility associated with the more standard cryptocurrencies like Ethereum and Bitcoin. Additionally, stablecoins with fiat backing provide investors with the opportunity to trade on crypto-to-crypto platforms without the need to first buy a major cryptocurrency. Now that we have a solid idea of what a stablecoin is, let's take a look at some of the more popular options. We'll begin with USD coin, or USDC, which is one of the largest stablecoins in regards to market capitalization. You'll usually find it hovering around the top 30 of all coins on CMC. The coin has seen significant growth since launching in 2018. It was launched by the Center Consortium, a collaboration of Circle, Internet Financial, and Coinbase. You're more than likely already familiar with Coinbase. For those who haven't heard of Circle, it's a blockchain holding company that's supported by Goldman Sachs. USD coin is backed by a one-to-one fiat currency reserve, which is regularly audited to confirm that proper reserves are available in the appropriate escrow accounts. Plus, the fact that the coin is issued by Coinbase means you'll have an easy time redeeming it for fiat and then moving it to your bank account. USD coin is an ERC20 token on Ethereum's blockchain. As a result, the tokens are easily integrated with smart contracts, which lends itself well to lending, investing, payments, and trading. The coin itself seems pretty trustworthy. However, it's important to remember that it's centrally controlled. You have to place your trust with Circle and Coinbase, which some people are hesitant to do. Now, let's take a quick look at some pros and cons, shall we? Advantages of USDC include the speed of transactions. Funds can be moved as quickly as the Ethereum network allows. The Ethereum blockchain currently has almost double the throughput of the Bitcoin one, and this could speed up further when proof of stake is implemented. Apart from speed, you also have the benefits of convenience. Given that you're using the decentralized Ethereum network, users can move funds around the globe within a matter of seconds by using USDC. With Coinbase and Circle, you'll know you're working with some of the biggest names in the industry. Coinbase is one of the few exchanges in the US with FDIC insurance and has some of the most robust coin security protocols on the market. It's also important to note that USDC is completely backed by fiat currency and submits to regular audits to ensure that it has the necessary funds. There are drawbacks to the USD coin though. The chief amongst these is that it's centralized and controlled by the Center Consortium. Centralization is the antithesis of the Bitcoin philosophy and has perverse side effects. For example, in this case, the powers that be reserve the right to freeze funds or blacklist addresses as they see fit. Now, some may say that this is too much power in the hands of too few. The next coin on our list is Paxos Standard. Paxos started out as an exchange in 2012, but moved towards offering crypto services and products in 2015. A few years later, in September of 2018, PaxCoin launched. Similar to USDC, Pax has a regular audit to ensure that the company has a reserve balance that lines up with the number of Pax coins in circulation. Pax typically resides comfortably within the top 50 of all cryptocurrencies based on market capitalization, and is usually one of the top 5 stablecoins on the market. It's listed on a wide variety of exchanges, which means it's easy to trade. Those who hold Pax can create an account at Paxos and immediately exchange their Pax for fiat currency. Pax was also issued on the Ethereum blockchain, which means that it's an ERC20 token. As a result, Pax coins offer maximum utility along with a high level of trust. So, what are the pros and cons? One of the advantages of Pax is that it's traded on a lot of exchanges, which means there's plenty of liquidity for the token. This is also advantageous for those users who are executing large block orders while trading in and out of Pax. Additionally, Pax is audited on a regular basis, so users know that the project has enough coins in storage to cover the amount in circulation. The third coin on our list is one of the most interesting stablecoins on the market. I'm referring to DAI, which touts itself as one of the only decentralized stablecoins available. DAI is not issued by any centralized authority, and the project does not have control over the coin. Additionally, unlike many other stablecoins, DAI does not use fiat currency to back it. The stablecoin uses smart contracts, which are backed by collateralized crypto debt. DAI is created when a collateralized debt position is created, which locks Ethereum into a smart contract. The contract holds the staked coins, creates DAI, which can then be unlocked at a later time using DAI. Now, I know it sounds complicated, so if you want to learn more about the DAI stablecoin, you can read our long-form review, which I've linked to below. DAI was built by the MakerDAO development team on the Ethereum blockchain. As a result, the stablecoin is secure, verifiable, and, most of all, decentralized. That means you don't have to use statements or audits to verify that DAI has the backing it needs. It's all confirmed right on the blockchain itself. Considering how volatile Ethereum can be, there were initial concerns about how well the DAI mechanism could work. So far, however, it has been a success, even with the price of Ethereum fluctuating the way it has. So, what are some of the benefits of DAI? Well, perhaps the biggest pro of DAI is that it's decentralized. You don't have to trust anybody or any entity. Its mechanics are coded into protocol, and you know exactly what is backing it and how it will react to price movements. Similarly, this fully decentralized feature means the stablecoin is quite popular. It has a high turnover on a plethora of exchanges, including Coinbase, so easy execution. And, as is the case with any ERC20 token, you can easily send and store DAI. A simple wallet can store millions of DAI securely and with a certainty of value. On the downside, since DAI is not a centralized coin and isn't backed with reserves, it's not as easy to convert your coins back into fiat currency. More often than not, you'll have to go through an exchange to sell your crypto, then withdraw it in fiat. Additionally, for those traders amongst you, there are not that many DAI order books. So, if you want to buy another cryptocurrency, you will first have to convert your DAI into Bitcoin, Tether or Ethereum, etc., which adds fees on top. Fourth up on our list is TrueUSD, which is a stablecoin that launched roughly 2 years ago in January of 2018. TrueUSD is quickly becoming one of the more trusted stablecoins on the market, primarily due to the transparency that comes from its parent company, Trust Token. Just like USDC and Pax, TrueUSD maintains a 1-to-1 ratio of its digital coins to the fiat currency it holds in reserve. TrueUSD also offers complete disclosure regarding how much USD it holds in its reserves. Trust Token partners with many banks and accounting companies. These partnerships often require third-party auditors to confirm balances, which the company releases to its users. You'll typically find TrueUSD in the top 50 of all cryptocurrencies in regards to market capitalization, so it's pretty popular. There are a couple of cool features available on TrueUSD that will stand out for users interested in stablecoins. First is its one-click redemption feature. With this feature, users can exchange their TrueUSD for fiat with a single click. Can't really be simpler than that. Second is the fiat support the coin offers. Not only does TrueUSD support US dollars, but Trust Token also offers True GBP, True CAD, True HKD, and True AUD. It's also an ERC20 token, so you'll find it just as easy to send or store as the others we've mentioned. Of course, there are drawbacks to TrueUSD as well. Like Pax and the USD coin, it is centralized. You have to place your trust in the Trust Token team. For those Bitcoin adherents, you will know that trust is a dirty word in crypto. As they say, don't trust, verify. And another point that could draw the ire of the privacy hawks is that TrueUSD requires both AML and KYC for purchase or redemption. Of course, this is pretty much standard with nearly all fiat gateways these days. You would have to do the same at a Coinbase or Kraken, etc. Now, last on our list of stablecoins is perhaps the most controversial of all. I am, of course, talking about Tether, or USDT. Tether was one of the first stablecoins and remains one of the most popular. It's usually in the top 5 in terms of market cap and has extensive market liquidity. If you really want to get an idea of how popular Tether really is, take a look at its daily volume. It does hundreds of millions every day, which exceeds the vast majority of other cryptocurrencies. This is because Tether is perhaps one of the most popular stablecoins to trade other cryptocurrencies against. It's much easier for an exchange to list a Tether order book than a US dollar order book. It's also a great trading pair for US dollar price discovery. The price in Tether is the price you will get the crypto for in dollars. What's interesting to me is how popular the coin remains despite the controversy that surrounds it. For example, earlier this year, Tether's own lawyers admitted that the company only holds 74% of its outstanding Tether. There are also questions surrounding the coin's connection with Bitfinex. Many of the founding directors of Tether are reportedly also directors at the popular crypto exchange. Now, even amidst these concerns, there are still a variety of reasons why traders prefer to use Tether. For starters, despite some trying times in 2017 and 2018, it's always managed to bounce back to the dollar peg. Mispricings opened up arbitrage opportunities which quickly closed said mispricings. Additionally, as I mentioned, the coin does plenty of volume. As a result, there's no shortage of liquidity. It's easily the highest among stablecoins. That means you can trade it with limited slippage despite the order size. It's also pretty easy to send with relatively limited transaction fees. This is because Tether recently migrated from the Omni network layer to the Ethereum blockchain. Hence, a large proportion of the outstanding USDT are ERC20 standard tokens. Oh, and this also means that you can store Tether just like the other stablecoins I mentioned above. Of course, there are drawbacks to Tether as well. We've mentioned some of the controversy that surrounds the company. However, that doesn't seem to be much of a deterrent to the vast majority of traders. Similarly, USDT requires KYC and AML identification for fiat conversion, so not the best for privacy hawks. I want to conclude now with a few final thoughts. What stablecoin you decide to use will really come down to your own personal preferences. Do you want liquidity over decentralization? Do you want ease of conversion over privacy? I myself am a big fan of DAI. I love that it's decentralized and is completely transparent. Yet there are very few coins I can trade DAI against, so it's not the best for the traders. Moreover, if ever I want to convert crypto gains into fiat, I will have to sell that DAI for another crypto and then make the conversion, adding to my trading fees. Many traders I've spoken to love Pax and USDC. Yet many others still rely on the ocean of liquidity that's provided by Tether. And that brings to a close my stablecoin review.